In 2000, only 22% of retirees paid more tax after turning 73. Today, over half, and it's no accident. In 2000, only 22% of retirees faced a higher tax bracket after required minimum distributions kicked in. Today, it's 53%. The IRS just announced that the required minimum distribution age will rise to 75 by 2033, but that only delays the inevitable. What's really happening? Congress keeps pushing RMDs later, which lets them raise revenue by forcing withdrawals into higher brackets. Ed Slott, America's IRA expert, warns that the biggest tax threat to retirees today isn't capital gains, it's ordinary income. The math behind required minimum distributions is a ticking time bomb. Here, how it can double your tax bill overnight. This chart shows what happens when a $1.02 M401K starts distributions, bracket jumps to 24%, and $1 and $5 goes straight to the IRS. The IRS calls it a required minimum distribution, but critics call it a backdoor tax hike for middle-class retirees. The 4% rule, the bedrock of retirement planning, is failing more often under today's tax and inflation pressures. Here's how often the 4% rule fails under different tax bracket assumptions. 17% failure risk today versus only 4% in 1998. Investment researcher Nick Maggielli just published new Monte Carlo simulations showing that even a 3.5% withdrawal rate can fail under high inflation scenarios. Inflation erodes savings, but higher taxes can accelerate the decline, especially if you're blindly following outdated advice. The good news, there are strategies to defuse the 401K time bomb starting today. Here are 3 proven ways to bulletproof your retirement. Roth conversion ladder, shift savings to today's lower brackets. Mega backdoor, move after-tax 401K money to Roth. HSA stacking, the only triple tax-free account left. The saying goes, it's not what you earn, it's what you keep. But in retirement, what you keep depends on what you've planned 20 years earlier. Not financial advice, for educational purposes only. If you're saving for retirement today, don't just stuff money into a 401K and hope tax rates will stay low. Run the numbers and build a plan that puts you in control, not the IRS. Subscribe and follow the Phantom Equity for more.